going, everybody? It is February 4th, 2025. Day log episode over NQ and the live stream view. So this is going to be probably the title, low probability conditions or higher time frame consolidation. Let me actually just switch over the contract here. And it's a really good example. I mean, I covered it pretty deeply, extensively within the beginning of the live stream of today, preparing all of you for something like this type of condition. And we've been nearing that or getting closer and closer to that as we've been inside of this consolidation. So a low probability condition can be identified through higher time frames and through the basically formation of what you're in. And between this high and this low, price has been inside of this for several weeks now, right? Since basically the second week of January. And even all of this as well, you can include in a bigger profile picture would be probably this high here and the low underneath it, which is back over here. So essentially, price is stuck in between this low and that high, and we're trending sideways, getting tighter and tighter into a smaller space. And that's what happens with consolidations, is price typically gets refined into tighter spaces until eventually price wants to break out. To me, I wouldn't be trying to force an idea in here, and it makes lower time frames a lot harder to trade, and you can expect worse conditions. And that's what we saw today. That's what we've been seeing. So as we keep nearing closer and closer, I don't know if I'm going to even be trading this the rest of the week, depending if NFP does something, but it's not worth it to just throw your money away inside of conditions like this. You're going to just be battling very hard conditions, trying to just get something, scrape something out of the market when you don't need to do so. To me, it's very, very difficult to find a certain model or find a certain framework to actually take a trade. Like today, there really wasn't anything there. So based off of what we saw yesterday, we filled in the liquidity void, which is the main drawn liquidity, at least for the beginning of the week. And since then, I mean, we haven't done a whole lot. Today, really, there was only movement higher, which we discussed in real time. Those type of movements in these environments can make you feel as if you should be expecting or anticipating that or being able to see that. I don't care what price was doing today. Even if it moved off higher, I didn't sit there and say I should have been a part of it. I think anything could have happened today, and either way, hindsight easily could have been utilized. As far as what we did do today, overnight, or at least midnight, we dropped down into this discount here. Let me put on the main fib here. We dropped down into a discount inside of this inefficiency, which was yesterday's first presented FEG. We dropped down into that. Those two down close candles would be your bullish order block there. You can also include this up close candle would be a bullish breaker right here. So you can extend that to your right. Once we moved higher, coming into the open, we had this inefficiency here on the 15-minute time frame, which we could treat as a inversion. Price dropped down into that, and we utilized it to send it higher above basically the opening price of the daily candle, which was also a new day opening gap that we had as well. To make note, we're kind of above the CE of the liquidity void as well when we're going into the open. Now, because I stated that, that doesn't mean that I should have been taking a trade or looking at it saying, wow, that's beautiful, because in these conditions, 50-50 scenarios are always going to happen. And that's why I'm very weary of it. And I also don't judge myself very harshly and say, you know, I should have been taking this or should have been participating in it. Even if I can see it in hindsight very clearly, or even in real time that I could see a certain move. It's all about protecting your capital and your mental capital, capital preservation. And to me, that's most important. Again, when I talk about these things, that's my particular style. It's what made me successful, especially in these conditions. You're going to be met with daily consolidations a lot throughout your years of doing it. So I know how to at least prepare myself and how to participate in them if I do. So all I'm doing is just highlighting as far as what price action did, but it's not to be noted as you should have been trading it. 5-minute inversion here, we dropped down into that, and that's what got utilized basically off the open. The 1-minute time frame, again, ICT was annotating a few things in here, but this was the open. Price drops down into this inefficiency here. Take out a small sell side liquidity pool. We spool higher. Utilize this inversion for value gap since from 8 o'clock. And then we draw towards the buy side liquidity, which was here above the pre-market high. Inefficiency presented. We utilize that to launch higher. A small little other one right there. I'll zoom in. So small inefficiency that's resting right there. And within that, or at least next to it, is going to be your mitigation block. So this up close candle is your mitigation block. You can extend to the right there. Price sends it higher, breakaway gap, and then we utilize the bullish order block here to keep extending price. And the rest of the session, or at least the rest of the day, to me was completely aimless. There wasn't a whole lot in here. Can I make something out of it? Sure. We failed to even gravitate towards the relative equal highs, or at least this high here. We failed to run that out. It should be no surprise in these conditions. All I can say about these conditions is my confidence and my trustworthiness within the PD raise and the concepts to work is very low. It's very limited because I know on a higher time frame context, price can seek either side. Overall, if it really wanted to, price can be willing to spool off lower. It doesn't matter if it was respecting a inefficiency or if it was doing something. It can immediately just drop lower if it wants to. Inside of consolidations, it's very, very tricky because price can fail to meet a certain high. Like we did here, we failed to take out this high. We could drop off lower. We could gravitate all the way back up higher, fail to reach the high again, drop lower, fail to reach the low. And you can see price will just get tighter and tighter inside of this range. Eventually, I guarantee you, it will look like a classic retail pattern, which is, I forget the name, but it's, something like a bull flag here where price just keeps getting squeezed into this range. And eventually, you will see a breakout out of that. My guess would be NFP if it had to do something. Maybe not. It may stay within this range for a long period of time. To me, I just have to sit still. Unless I see something very, very clear, where it's a minimum amount of risk, where I can target a clear draw on liquidity in the moment of time within maybe a macro, that's something I would participate in these conditions. Otherwise, I would just rather sit out of it, save the capital, preserve it for a better time, because there's going to be a lot better moves, a lot better conditions in the coming months and the whole rest of the year. I don't need to burn cash right now, and that's the mentality you should be having. Just because you can trade doesn't mean you should be trading. You should be looking at it the whole year perspective and waiting for clean price runs. Something that's simple with logic that has evidence stacked behind it that you can actually utilize. So that's really going to be it for tonight's video. It's going to be a short one. We'll be back here tomorrow morning with the live stream. Until then, peace out.